I moved everything I have into Fidelity within the last week or two, and in that time we've generated about $1,000 worth of options income. Now we're going to go over how I did that in this video. I have about 4 or 5 different positions right now, and I'm going to show you my intentions for each and every one of these positions. I'm going to show how much I made for each one and my game plan moving forward. So without further ado, let's go ahead and get started with my first one on the list. It's the biggest one of all, and that is CleanSpark. This has been the biggest sell that I've made through options income so far. Now, right now I own about 400 shares of CleanSpark at an average price of $13.25. Now, I think that the company offers a lot of value at these prices. I told you before, it's by far and away my most risky play, and so I want to sell some longer dated contracts. One of the main reasons why I also own this company is that not only does it have a lot of upside potential, but it has one of the most incredible IVs you can find out on the market. Sometimes its contracts months out still have IVs in the hundreds of %. It is absolutely crazy. But the 400 shares I own, I sold 4 covered calls against them for $100 each. After a little bit of trading commissions, which are very small in Fidelity, and also some regulatory fees, I ended up with $397.26 is what I finished out with. Now, this company is a great company, and here's what's awesome moving forward. Go ahead and take a look at this Webull chart. We're going to use Webull because I think their visual charts are really appealing, so we're just going to use that one. This is CleanSpark's ticker symbol CLSK's chart over the last year or so. You can see that it's hit highs much higher than what it's currently trading at now. At the peak earlier this year, what was that, January of 2021, it hit an all-time high of $42.60. And right now the company trades at about $14. Now here's the best part about this. I sold contracts that expire in January 2022, so about 5 months from now. So my goal is to get 1% a month in monthly income through options income. So basically 5 months, so we take 5% of $13.25. So basically you can find out that I need to generate about 65 cents a contract, or $65. Now I generated about $100 each from these contracts, and it is well above my goal, and it's at a strike price that is ridiculous. Take a look at this chart again, and you can see that my strike prices are $30 each. And so I believe that when the stock gets to expiration, I don't think it'll be a $30 stock. I think that it is very likely that this stock will probably be in the teens or maybe even the 20s, and hopefully I'll have some capital gains on the stock, but regardless, I think that those will expire worthless, and I'll just pocket that $400 5 months from now. But even if I'm wrong, if that's the case and this company rockets higher and it gets to $30 each or more, I get to sell out for a double up. So that's my plan with CleanSpark. Next up, we have my options contract, which generated $236 worth of income. And this is Smile Direct Club. And these expire about 2 months from now, on October 15th, 2021. Now this strike price is at $5, which is right around what the company trades at. Go ahead and take a look at this chart and you'll see that Smile Direct Club had its worst day in trading history ever, going down about 25% or so off a recent earnings report. Now this company has been beaten down like a dog. I don't really think that the company has massive potential. It's not my favorite company ever, but at $5 a share, I'd be willing to take a small position. And so I committed up to $2,500 through the 5 contracts I sold. And you see that it generated well over $200 from this options contract. And the cool part is, once again, we target 1% a month. And these contracts are 2 months out. So these are cash secured puts. I committed $2,500. 2% of $2,500 means that I need to make $50. This contract generated $236, significantly higher than my target percentage. It obviously has a bit more risk. I could get a sign on these shares, and I don't think that Smile Direct Club is by any means going to be my largest position. It's not even close to that. But am I okay owning a little bit at $5? Sure, why not? So in the meantime, I'm going to generate some massive income over the next 2 months. I may get assigned, I may not, we'll see, but I don't think I'll probably get assigned on these shares, and even if I do, it'll be just fine. Let's go ahead and take a look at my third position. Okay, this next position, this is the one that gets me excited, okay? You know that the vast majority of this portfolio has an extremely outsized position in Corsair Gaming. Now, I love the 3 companies that I own underlying shares in. I love Corsair Gaming, I love Tattooed Chef, I love CleanSpark, and I will be diversifying this portfolio a little bit more than what it's at currently. It's just where I'm getting started. I'm still building out this Fidelity portfolio, but my largest position is by far and away in Corsair Gaming. I committed about $13,500 into this portfolio out of the $30,000. That's about 45% or so of the portfolio. Now, Corsair Gaming has an incredible future ahead of it, in my opinion. And I'm trying to be very conservative on where I sell the covered calls at. Because you can see my strike price was about a month or so out from where I originally bought the shares. My 500 shares is what I own, and I own it at an average share price of $26.86. Now, I sold these covered calls to expire next month at $37.50. Now, that would be a huge spike up, and I do not think that the company will get to that price by next month. If I'm wrong, I'll be really sad, but even in that scenario, I'll be taking out a massive profit. Okay, plugging it into my calculator just out of curiosity. So if those were to get called away, I own an average share of $26.86. If I were to sell at $37.50, I would be taking almost exactly a 40% gain in 1 month on my largest position. And so if that were to happen, okay, that's fine. I would take thousands of dollars in profit. I would be sad, but I'll walk away from the table. That's perfectly fine. Now, I'm going to be really conservative moving forward. These options contracts did generate about $161 worth of options income through just a month and a half or so, and that is, once again, right about my target. Corsair Gaming is my large position, and I think over every single month that I own these shares, I'll be generating lots of income. Let's go ahead and get to my last position. Okay, last but not least, we have Tattooed Chef. And this company, once again, I'm really bullish on it now that it's started to go back down. It had its worst trading day in history just the other day, and I own 300 shares of the company at an average share price of $20 on Fidelity. I really have an average share price of $17 if you watch me back when I was on Robinhood, but whatever, I own 300 shares of the company, and I sold covered calls against my position at an average strike of $25. Now, those are probably going to expire worthless after this horrible trading day that I experienced just the other day. Now, since the company went down so heavily, I also have a cash secured put against this company. The covered calls generated about $122 worth of income, and then the cash secured put that I sold that expires in just 1 week generated about $40 worth of income. Now, like I've been saying this whole time, my target is 1% a month. With the $17.5 put, that would mean that it needs to generate at least $17.50, and this generated over $40. So that's almost 3%. That's well over 2% of my target. Very high, and I want to own more shares of this company at that price, so it's perfectly fine if I get assigned. If not, it's a free $40. That's the way I look at it. Those covered calls will likely expire worthless as well, and once again, even if it goes up to 25, I won't be happy about selling out. I don't want to sell out at 25. But I necessarily wouldn't be angry either because I can just put that into another position. Go ahead and take a look at this yearly chart. You can see that Tattooed Chef is very volatile. It's been all over the place from the high 20s, even in the 30s at one point, all the way down to the teens. It's been all over the place. I might be forced to call away these shares from my options contracts. I might not. Either way, I'm bullish on the company long term, and I'm not going to sell at a price that I'm not happy with. Okay, but to add up all the positions that I went over in this video, we had a clean spark covered call that expires in January, which generated $397.26. We had another contract, which is a cash secured put for Smile Direct Club, which expires 2 months from now, which generated $236.57. We have $161.57 coming from a covered call expiring a month from now for Corsair Gaming. And then we have both covered calls and cash secured puts on Tattooed Chef, which generated $122.93 and $44.41. If you add all those up, that adds up to $962.64. So in just starting this portfolio, we've already generated almost $1,000 worth of options income. Now, some of these take months for me to receive that money, but that's perfectly fine. Like I said, I'm okay with holding these shares or holding these contracts for the amount of months that I agreed upon. And so that's how I look at my portfolio, the current positions that I have open. Thank you guys for watching. If you have any questions, leave them down below. Feel free to reach out to me if you want to get started. Thank you guys so much for watching, and I'll catch you guys next time.